Federal Reserve raised its key interest rate another 1/4 percentage point Wednesday in its ongoing effort to bring down prices. The increase is the 10th straight interest rate hike since last March in what has been the most aggressive pattern from the Fed since the 1980s, when rates reached nearly 20%. The hikes to curb rising prices are among the factors blamed for the biggest banking sector meltdown since the 2008 financial crisis. 3 of the 4 largest bank failures in the nation have occurred in the past 2 months. Those dominoes tumbling are undoubtedly why Fed Chair Jerome Powell on Wednesday started his remarks saying conditions in the banking industry are improving and that the Fed will improve its own monitoring, saying, quote, "We are committed to learning the right lessons from this episode and will work to prevent events like these from happening again." Nancy Cordes has more details from the White House.
It's possible that we will have what I hope would be a mild recession.
Today's move by the Federal Reserve pushed interest rates to their highest point since 2007, and the Fed may not be done yet.
A decision on a pause was not made today.
It's a high-stakes decision because the rising cost of borrowing money has already contributed to the failure of 3 major banks in the past 2 months. It has also driven down home sales by nearly 20%. Emily Boyko has been house hunting in Minnesota for 6 months.
I don't think anyone's ever prepared to pay more, but it's unfortunately our society.
And yet the inflation those rate hikes were meant to tame remains stubbornly high, down from last year's peak of 9%, but still far from the goal of 2%.
It's now clear that the Fed was late in starting its rate hike campaign. And because they were late, they had to increase by much more than the normal pattern of Fed increases.
Now, some economists are warning that raising rates again could push the U.S. economy into a recession. In a letter to the Fed chair this week, 10 congressional Democrats, led by Senator Elizabeth Warren, urged him to change course. The current strategy, they warned, has the potential to throw millions of Americans out of work. Chairman Powell issued a warning of his own today about what could happen if Congress fails to raise the debt limit and triggers a default.
But no one should assume that the Fed can protect the economy from the potential, short and long-term effects of a failure to pay our bills on time.
Nancy Cordes joins me now. Nancy, while Powell is trying to settle things down on the markets, Treasury Secretary Janet Yellen has been upping the angst a little bit. Earlier this week, she said the U.S. government might not be able to pay its bills as early as June 1st if Congress doesn't raise or suspend the debt limit. So the president's invited the speaker over. What's the state of play for that meeting next week?
Well, it won't just be the speaker, which is interesting because the president is also inviting the Democratic and Republican leaders from the Senate. There's no question that this president has a much longer, much deeper relationship with the Senate Republican leader Mitch McConnell than he does with the House Speaker Kevin McCarthy. He'd probably rather be negotiating with McConnell. But McConnell has sent signals that that's not going to happen, that this is really the purview of the House Speaker and that President Biden needs to cut any compromise they can come up with directly with the House Speaker. But at this point, John, the two sides are so far apart on spending cuts, it's really hard to see how they craft some kind of compromise that both sides can be comfortable with and vote for in time for that deadline that the Treasury Secretary Janet Yellen has set. This is just getting underway. The White House insists that the spending cuts talks have nothing at all to do with the debt limit. They still insist there should be no preconditions for raising the debt ceiling. But obviously, the timing suggests that these two things are very much linked.
Well, it's going to be a fascinating month ahead of us. Nancy Cordes at the White House. Thanks, Nancy.
You're welcome, John.